Give me a minute. I think nobody can. Something is.
I think there is something.
So I believe that just give me a minute.
Okay, there's a bit of technical hiccup over here. So let me double check my microphone again. I think. Okay. So okay, my apologies. Let me fix this. Okay, give me a second. Let me fix this here. Mic test. Test. Okay, good. Okay, excellent. Sorry about that. Okay, so where we are. So okay, yeah, today is Wednesday, 18th of October. My apologies a while ago because of that slight technical glitch in my microphone setting. So before we start our daily dose of market insights over here. So let's take a look at the disclaimer slides first. All right. So this presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. Leverage trading carries a high degree of risk and may not be suitable for everyone. Any forecast or prediction or projection in this document is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore, MAS. So now, as usual, this will be the three, we call it a gist of this daily dose of market insights, will be a recap of key highlights and events that took shape yesterday. What are the things to look out for today in terms of events, as well as the economic data releases, and as well as to round out, we have the short-term technical analysis outlook on the broad-based asset classes ranging from the benchmark stock indices, the FX market, and as well as the key commodities. All right, so now what happened yesterday? So yesterday we have a pretty important release of data, including today's China data as well, that was released about an hour or so ago. So let's start with the yesterday's US session over here first. All right, so yesterday US session over here, a couple of interesting data to take note. Let me share view on my screen will be the earnings results of Goldman Sachs and this Bank of America. So as you know, that Goldman Sachs and Bank of America are key major US banks. So why the banking stocks is important? Because they do have a significant influence on the US benchmark indices. So I could see over here is a rather mixed results on the US banks. The Goldman Sachs actually slumped by 33%. So it's pretty much of a lackluster report. But however, Bank of America managed to beat expectation. So all in all, right, what we could see over here is that actually this overall US performance is rather a mix. What we could see yesterday's. So the S&P 500 came in almost unchanged. But the worst was the Nasdaq 100 negative 0.33%. Later I'll share with you why Nasdaq 100 actually plunges, because due to the semiconductor sector. The Dow Jones Industrial Average also, after the mixed result from the two banking titans, also closed almost unchanged at 0.04%. The Russell outperformed by positive 1% over here. So this is what causes the Nasdaq to actually underperform, was actually this news up from US. Actually, it's not really that new, because at the start of late last week, there was actually some kind of noises up from the US administration that they will actually tighten this ongoing, we call it a chip act, that is actually more or less preventing China from getting the latest chip technology know-how. So what I could see over here is that Nvidia was being targeted yesterday, where right now there is Nvidia will start to face more restrictions. That means, i.e., they are very less. Not say they will have a tougher time selling products to China. All right. So all in all, so that actually causes the chip sector, the semiconductor sector, to be pretty much very much severely in the red yesterday, with the definitely Nvidia is the underperformer, down negative almost 5%, to be precise, negative 4.68%. And do not forget, Nvidia is one of the top 5 component stock inside the S&P 500 and the Nasdaq 100. So that actually explains why the Nasdaq 100 actually underperformed among the benchmark US indices. All right. Okay, so that's for more of the corporate news. So now coming forward to the economic data. So if you look at the economic data over here, yesterday we have a key data in US actually out will be the retail sales. So US retail sales actually bit I would say came in we call it better than expected in a way, because it managed to even beat forecast at 1.5%. So the year-on-year figure, this retail sales, nominal retail sales, that means taking into account of the dollar cost of goods or services consumer purchase times by the number of unit they purchase. All right. So they're up 3%, 3.8% year-on-year. Compared to the previous month of negative, pardon me, compared to the previous month of positive 2.9% year-on-year, that was August. So if you look at the trend of this retail sales data over here, we could see them slowly inching upwards, all right, since hitting the low of 1.29% for this year in April 2023. So that's actually kind of a healthy, rather resilient US consumer, we call it a sentiment. But however, consumer spending behavior. But however, if you look at the one that is stripping off the inflation, this is nominal one. So nominal, as you know that this figure itself could be masked by higher cost of services, right? Because retail sales is nominal. So if you look at the real retail sales figure I get from Y chart, so this is the real retail sales year on year is actually negative 0.68% year on year. So it has been negative since November last year. Okay, so all in all, right, if you strip out the we call it the rising cost of goods and services, in fact, retail sales is not so rosy as per se. And do not forget over here is that right now, given the fact that consumer expectation also came down based on the University of Michigan figure, and we also now coming to facing a risk of this stagflation due to the fact of a higher geopolitical risk that is being prevalent now in two fronts of a prolonged we call it conflict that actually take into account of longer significant stakeholders, Ukraine, Russia. Then now you have Israel, Hamas, and spreading over to the other Middle East region where potentially Iran may get involved as well. So with that, right, that actually also kind of push up. What's more important over here is the fact that the US Treasury yield keep on pushing higher. So in terms of the positive feedback loop in the US 10-year Treasury remains upbeat on the upside. So you look at this, the US Treasury yield. So previously you highlighted, right, this fall in a yield of 4.9% to the 20-day movement. This is more like a corrective decline within a medium term and a major uptrend, which is it came in with expectation, and right now it's now heading upwards to retest the 4.9%, and eventually potentially the next resistance will be 5.2%. This is the US 10-year Treasury yield. That means what we are seeing right now is we are now the global economy will start to face a higher cost of funding, provided this higher cost of funding will remain as long as the Fed remains their mandate of keeping interest rate, the Fed fund rates higher for at this higher level of around 5.25% to 5.5% for a longer period of time. So i.e. that could actually be a much of a headwinds for risk assets like equity. Okay, so that's for the market's implication on this interplay between the retail sales and the 10-year Treasury that I bring forward, as well as how does it imply on towards the risky assets, which is the equity asset classes. All right. So now with that over here is that later I'll share how dollar will still remain mixed. Why?
speakerphone right now so that everybody could hear me right now. Okay, so hopefully good. Okay, good. So I've removed my headset. Okay, so my apologies for this hiccup. Okay, so overall, right, what we could see over here is the rising 10-year US Treasury yield, which is still in this positive feedback loop I shared on my screen, has a detrimental impact on risk assets like equities. That means, i.e., it's going to be a much more challenging time for global benchmark stock indices to remain on a bullish bias in the short to medium term. Okay. But however, over in the FX space and the commodity space, especially on gold, later I'll share, it may be painting a different story. All right. So now let's ask immediately see what are the other key economic data to look out for today. Okay. So meanwhile, let me turn off my camera so that you all can focus more on the screen. All right. Okay, good. So what you could see over here is economic data for this coming European session, or in fact, before I go to the European session, I want to highlight China data. So China data came out at 10 a.m. So this China data right now, right, the GDP growth for the Q3 actually came in better than expected at 4.9% year on year, managed to beat concessions at 4.5%, and even the industrial production managed to actually inch up slightly higher above concessions at 4.5%. And what's remarkable is the retail sales. So consumer in China are still we call it spending 5.5% year on year above consensus expectation of 4.9% and above the previous month of 4.6%. So overall, right, what we could see right now at this juncture over here is that there's a risk of a lower deflationary pressure in China. All right. So later it will actually impact the FX market, especially on the CNH, and most importantly on the on this currency that are proxy to the Chinese yuan, that has a close relationship to the Chinese yuan. Okay, so going forward, what are the next economic data to look out for? Will be inflation rate up from UK at 2 p.m. Singapore time. Market is expecting a slight dip to 6.6% year on year for the month of September, slightly below 6.7% that was printed in August. Core inflation also expect to dip lower to 6% from 6.2% in printed in August. Then over here, then you have ECB President Lagarde will be speaking at 5 p.m. Singapore time later. Then you have the finalized Eurozone inflation rate will be up later at 5 p.m. as well. Then going forward over here, you have several key US housing data that will be out at 8:30 p.m. Singapore time. And most important, I'll highlight over here is there are several key US corporation earnings that will actually be released today. Will be for sure Tesla after the market close. As why Tesla important? Because Tesla is also one of the top five component stocks inside the S&P 500 and the Nasdaq 100. Then followed by Netflix, and as well as the other last major US bank will be Morgan Stanley. All right, so a couple of what I call heavy key economic data and events to watch out for today. So very quickly now back into the technical outlook. So before I jump into technical outlook, let me start with the FX market first. So over here, overall in the FX market, I want to open up the chart over here. Okay, so let me share with you all what do I mean by the FX market right now is rather mixed. No clear sign of a dollar strength across the board, despite the fact that the US 10-year Treasury yield is ticking higher. Okay, so now let me expand it. It's a bit slow right now. Okay, so today's will be 18. Okay, so just make sure this is refresh. Okay, so what we could see over here, right? The dollar starts to actually tumble against the CNH, and this CNH over here has starts to strength, we call it remains pretty much resilient against the dollar, and that also causes its proxy, which is the Aussie dollar, to actually be what I call resilient against dollar strength as well. But the dollar strength right now is still prevalent against the dollar, against the sterling, and against even the Kiwi. Right now, this morning, it has started to slide as well due to close proxy with the Aussie dollar. So then also don't forget the dollar Canada also starts to actually come down a fair bit due to higher firmer oil prices. And the dollar yen going to be sideways. Later I'll share with you the chart of the dollar yen. And do not forget, Singapore also has a close relationship, correlation with the CNH, the offshore yen. So then for sure the dollar is also weakening against the Swiss franc, because like we highlighted yesterday, the Swiss franc right now is considered as a safe haven currency. Why? Because of that geopolitical risk premium that is lingering around due to the fact that of that Israel-Hamas conflict that has yet to be resolved. Okay, so it's pretty much of a mixed bag picture on the FX space, where potentially we could actually explore a crosses pair that we highlighted yesterday, like the Euro Kiwi and the Swiss Yen that we highlighted earlier on also as well in my yesterday's market daily dose of market insights. So now with that into the picture, right, let's now take a look at the short-term technical outlook of the majors first. We take a look at, let me go to my chart. Where are we right now? Over here. Okay, so let us start with the euro dollar. All right, so the euro dollar, right, yesterday we have a short-term bearish bias, still 1.0595. Still the price action didn't actually break above that level. So during yesterday's US session, it hit and reacted off it. All right, so still no change. For sure, this is a key important pivotal resistance based on yesterday bearish reaction of it. So we'll still be using that 1.0595 key short-term pivotal resistance on the euro dollar to maintain that short-term bearish bias to at least retest last Friday's swing low at 1.0490. So however, if we start to see an hourly close above 1.0595, then this short-term bearish bias will be invalidated to see a squeeze up to retest last Wednesday and last Thursday minor swing high at 1.0635. Okay, now on the sterling dollar, so the sterling dollar actually continued to perform weakly yesterday against the dollar, means the sterling against the dollar. So for sure, it remains capped below this downward sloping 20-day moving average, overlaid on the 1-hour chart, like I did on the like I highlighted over here. So still no change. 1.2240 key short-term pivotal resistance to maintain that short-term bearish bias for at least a minor push down to retest this minor support level at 1.2110 on the sterling dollar. But however, if we start to see an hourly close above 1.2240, then this short-term bearish bias will be invalidated to see a squeeze up to retest last Wednesday and Thursday minor swing high at 1.2330. Okay, so that's for the sterling dollar. So now very interesting on the dollar CAD. So on the dollar CAD, still recall that on Monday we do have a bearish bias due to the fact of the firmer oil prices. It reacted and hit the predefined support level that we mentioned before it bounced again yesterday, refused to break above that key short-term pivotal resistance that we highlighted on Monday, and it continued to inch down yesterday throughout the throughout the later part of the US session. So for sure, it's this 1.3695 key short-term pivotal resistance is a pretty much important level to at least in the short term to maintain whatever bullish momentum that dollar CAD could have, but unfortunately the bulls didn't manage to actually surpass that 1.2695. So for today, I'll be using 1.36, pardon me, a bit of tongue twisting, 1.3695 as my key short-term pivotal resistance to have this to maintain that short-term bearish bias on dollar CAD to retest 136.20. A breakdown below 136.20 potentially could see another deeper minor slide to last Tuesday and last Thursday minor swing low, acting as a support at 135.80, which is also the 20-day moving average. But however, if we start to see hourly close above 136.95, then potentially we start to see a squeeze up to retest this 134.40 major range resistance that is in place since this high of 11th of October last year. Okay, so that's for the short-term bearish bias view on the dollar CAD. Okay, so now what's interesting about the dollar yen over here? So for the dollar yen, yesterday over here there's actually a fat finger push down. So you could see during the US session, the 5-minute, there's a one big figure plunge. Rumored over here is that potentially it could be BOJ, what I call that, stealth intervention, but there's no news, official comments on that. But remarkably, there is actually a push down. But what's important over here from a technical analysis perspective is that it managed to actually stop again right at the 20-day moving average, which I overlay on the 1-hour chart. So previously we had the support level at 149.07. So what we could see over here is that we for sure this 149.07 will be a key pivotal support level, looking for at least a test up to this danger zone of 150.30. Bear in mind that around the 150.30 is a resistance level, and 150 figure level. There's also previously where we start to see a slew of fast and furious verbal so-called comments of intervention to actually stall the Japanese yen weakness against the dollar by key Ministry of Finance official out from Japan. However, if we start to see an hourly close, a clear hourly close below 149.07, then this bullish bias will be invalidated, and potentially we may start to see a start of a more substantial corrective decline. In the first step, retest the minor range support level at 148.25 first. That's for the short-term outlook on the dollar yen, still maintaining that potential bullish bias heading into a risk level of 150.30. Okay, so now that's for pretty much of the FX space that we have for today. So now going forward, before we jump into, before that let's jump into the indices right now first. Okay, let's start with the Hong Kong 33. So for the Hong Kong 33 index over here, yesterday we do have a neutral bias. Same thing, remain unchanged despite today the fact that we start to see a very strong push up in a strong, not push up, a strong relatively upbeat, I like to use upbeat instead of strong, a relatively upbeat key China data, which is the Q3 GDP, the industrial production, and the retail sales that I shared well earlier. The Hong Kong 33 still refused to break above our upper neutrality range, which is the upper range level at 17,880, but also refused to break below 17,680. So today we're still expecting this sideways range trading to be holding for now, as long as these two levels didn't break. So still maintain we call it a neutrality bias for today, 17,880, upper limit, lower limit 17,680. But however, if we start to see an hourly close below 17,680, then potentially we start to see a bearish, short-term bearish bias conditions start to creep back into the Hong Kong 33 index to retest the support level at 17,450 / 17,320. And also why the market is trading sideways right now is due to the fact of this fear of this impending country garden potential default, as today will be the last day of their grace period where they must cough out this 15.45 million coupon, or they have an agreement with their creditors to actually restructure this overdue coupon bond payment. So that's why market is pretty much hesitant to push up the Hong Kong 33 index, despite the fact that we start to see a much more upbeat key China data that's out earlier. Okay, now other we call it technical outlook on the benchmark indices will be the German 30. So German 30, no change. It has been trading sideways. Yesterday, attempt to retest that 15,090 level before bouncing up, but refused to break above the 20-day moving average. I think as an intermediate resistance at 15,280. So I do not want to keep it so tight at 15,280. So still using that 15,410 as my key short-term pivotal resistance level to maintain that short-term bearish bias. Looking for a retest again at today at 15,090 / 15,045. A break below this level exposes the next support at 14,930. But however, if we start to see hourly close above 15,410 level, this key short-term pivotal resistance, then that bearish bias condition will be invalidated to see a squeeze up to retest that 20-day moving average, acting as a resistance at 15,630. That confluence with a graphical congestion area over here, and as well as the minor descending channel resistance that is in place since the high of 31st of July this year. 15, yeah, that is coinciding, confluencing at 15,630. Okay, so now the US Wall Street 30 index. So US Wall Street 30 index over here is yesterday there's a bit of a whipsaw at the 34,055 key short-term pivotal resistance before it bounces down lower. So I will still maintain that short-term bearish bias using yesterday 34,160. That means there's an upper limit to maintain that, what you call it, whipsaw. 34,160 key short-term pivotal resistance, looking for potential a short-term bearish bias condition to see at least a test at this 20-day moving average that is acting as a support right now at 33,690. But however, if we start to see a breakup above 34,160, then this short-term bearish bias will be invalidated to see a squeeze up towards the next resistance level at 34,370. And also bearing the fact that yesterday the RSI has started to shape a bearish divergence condition as well, where prices push higher but test the short-term pivotal resistance, refuse to have a clear breakout and start to retrace downwards and start to show this lower high on the hourly RSI, indicate to us that yesterday's push up, we call it momentum, has started to get ease off. Okay, so that's for the US Wall Street 30. So Nasdaq 100, no change. Yesterday attempted to actually slide down and almost test the 20-day moving average. I think it's around 14,920 support level before it bounces off and it retraces off again right at this key short-term pivotal resistance level that refused to break in 3 sessions. Okay, so for sure this 15,240 is a key pivotal resistance level that we got to watch and also maintain for that bearish bias condition for today. Looking for another test down again at 14,920. But however, if we start to see an hourly close above 15,240, then this short-term bearish bias condition will be invalidated to see a squeeze up to retest the next resistance level at 15,355. All right, so very quickly, let's go to gold. So gold right now over here is much more indicating to us there is, okay, let me put it, where's my gold price? It's over here. Okay, so let's go to gold. So gold right now is indicating to us very much more of a geopolitical risk premium that is coming into the marketplace right now. So on Monday, we do have this 19,003 key short-term pivotal support level that we have. So yesterday, gold price going to inch up higher after a retest at this former medium-term descending channel that is in place since 4th of May, turns into a pullback support, retest it, and going to shape higher high and higher low. And also the RSI still remains pretty much healthy after dipping down from the overbought level, managed to help at the 50 level. So far, no clear signs of a bearish divergence yet. So you need to indicate to us that the momentum still remains intact, at least the short term. So gold right now is ignoring the higher cost of higher opportunity cost of holding gold, but rather the risk of a stagflation risk creeping into the global economy, and as well as this rising geopolitical risk premium that is in place in the marketplace. So for gold, right, what I do over here is that for today's as price has going to inch much higher, so I'll be using this level here, 1914, as my Titan key short-term pivotal support for today, potentially still maintaining that short-term bullish bias for gold, heading into that resistance at 1949, followed by the upper limit of this minor ascending channel at 1917/1983 for gold. But however, if you start to see an hourly close and a breakdown below 1914, be so confluence with the lower boundary of this short-term ascending channel, then this short-term bullish bias will be negated to see a start of a corrective, much more deeper corrective pullback to retest 1903, followed by the 20-day moving average acting as a support level at 1880. So that's for the gold outlook, still maintaining that short-term bullish bias condition. Okay, now very quickly, let's heading on to the last one that I want to share with you all will be oil price. So for the WTI crude oil price over here, okay, where's the oil chart? Okay, never mind. Yeah, this WTI crude oil. So WTI crude oil over here on the 1 hour chart, what we could see over here is that the oil price has already surpassed this 88.60 level during Asia session. So now inching upwards towards the next resistance level, which is 1930/91 that we highlighted yesterday. So for sure, today's key short-term pivotal support, I will actually raise it much higher, tighter level, to be very close to this 20-day moving average, which is yesterday's swing high area at 87.30. Okay, so 87.30. So 87.30 will be my tightened key short-term pivotal support level for today. Okay, to maintain this ongoing bullish bias in WTI crude oil, which is West Texas oil, to head up potentially to test the next resistance at 1930.91 figure level. However, if we start to see an hourly close below 87.30, then we call it a rally will start to take a breather to see a retest at the 50-day moving average, I think as a support level at 86.30. A breakdown below it may take us back down to the gap support level at 83.20, 83.20 level. All right, so now that's the pretty much sum up for the key highlights that I shared with you all today for the daily dose of market insights. So my apologies for the earlier hiccup on the voice system. Hopefully everything is well, that you all could hear me pretty clearly. And also do not forget this particular replay of this we call it a daily dose of insights will be actually shared with you all as well for those who register and uploaded in our OANDA Asia Pacific YouTube channel. So with that, have a great day ahead, and I shall speak with you all again tomorrow. Thank you.